Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond of the Contrarian Trader, and the markets are opening up. You're looking at the E-minis, the S&P 500 E-minis, Sunday evening, Columbus Day tomorrow, bond market closed, stock market open. We're opening up at current about a percentage point. And I'll give you my outlook on this right now, and we're going to go over. I'm going to pause the futures, let them settle down. I'm not saying that we're going to immediately drop from here. May not happen tomorrow, may not happen by Thursday, but I'm predicting that we have seen a top in this market with the exception of one thing occurring, and only one thing. And I'm going to talk about that in a moment. So before we get into the rest of the futures markets, let's do this first. I want to know if we take out lows, we'll keep it kind of loose here. I suspect they're going to fill the gap at some point in time. I want to talk about the macro view here of what is the public explanation for what's going on here. And I'm going to give you the contrarian thinking of what's going on here. So we have alerts letting us know if we take out prior lows, fill the gap, and the low of post-close on Friday. And of course, if we take out higher highs. Now let's just come back here if anything quick happens, and we can take a look at what's going on. But we're going to come back nonetheless. I want to play for you a video which kind of puts into context what is going on here. We know about President Trump after hours, and I warned about this. Beware the Friday afternoon dump post-market close. They send out bad economic reports or bad news after the market closes, so that by Sunday night, the bad news may or may not have faded a bit. Obviously, it wasn't going to fade a bit. So there was Truth Social tweets put out. You had Vice President Vance that was on the news programs this morning trying to take the pressure off of the markets. They knew what was coming this evening if they didn't get in front of it. So that's the public perception of what's going on. That's how they're managing the markets. But in reality here, we're dealing with something far more nefarious, far more sinister. Listen to this.
China had a very sinister plan in motion to kill every single business in the USA, but it was spoiled last night. You see, over the last few weeks, while the CCP was negotiating a trade deal with the USA, they were secretly blackmailing other countries to stop exporting goods to the United States. We only know this because one of these countries actually shared the blackmail letters with the Trump administration. Now, according to this letter, China wanted to kill every American business, and they wanted to do this on November 1st, 2025. The terrifying question is, why China thinks they can even attempt something like this? Well, the answer lies in their insane monopoly on a critical sector that was once ruled by the US. You see, defense systems, semiconductor production, automotive manufacturing, and healthcare all can't function without rare earth elements. China had a very sinister plan in motion to.
So what the Chinese are doing, and this really speaks volumes as to what's going on here, is that the Chinese, they have now amassed so much manufacturing strength and influence that they're now in a position, both militarily and economically, to say, okay, we can put up a fight with the United States and could quite possibly win, because we gave our manufacturing away. And as it comes down to the rare earth mineral story, these are critical elements. And not only are we so inept, so incompetent, that we did not have a strategic reserve built up years ago, years ago, 3 presidents, 4 presidents ago, anticipating this, we actually send some, if not all, of our rare earth minerals over to China to refine them. So we are so reactive right now, it's ridiculous, and the Chinese are taking advantage of it. And when it comes down to this, trying to put every single business in the United States out of business, we've heard this before. It was called COVID, and it succeeded in great extent, at least shutting down the vast majority of the U.S. economy, and for that matter, the global economy. Don't underestimate the cojones on the Communist Chinese Party. They are ruthless, and now they have the confidence to put up a fight. So now we could go back, now that we have a little bit of context for what the Pimp Mac Daddy move here, and we could take a look at the stock market and say, okay, so we had JD Vance come out and, he said that, all is good, everything's going to be fine. We have President Trump sending out tweets, oh, it's going to be fine. President Xi had a bad day. That's a bunch of nonsense. I can tell you right now that the contrarian mindset here is that you need to realize that China is on par now with the United States economically. Militarily, they have far more ships than we do in their Navy. Not that they could beat us in a war, completely different type of naval setup. We still have the best military in the world, but they're catching up, and they're doing so rapidly. They could produce a couple of battleships, or that we don't really use battleships anymore, a couple of aircraft carriers a year. We can't even get one within 10 years. It takes so long. So we're way behind. They know it. And there's one thing else that's coming up, and that's called the midterm elections. In the eyes of the Chinese, President Trump needs to be neutered. He has way too much power, way too much influence, and they need to neuter him. So 1 year's time from now, we're going to be in the heat of election season, and you could bet your bottom dollar that what we're seeing right now has everything to do with short-term, midterm elections, the flipping of Congress back to the progressives from the Rhino Republicans. Not that I love the Republicans at all, but pick the lesser of two evils. So I'll take the Republicans. So I don't think that we could expect that we're going to have a trade deal anytime soon. I warned about this the first time they gave the Chinese a 90-day pass on a trade deal and sanctions being implemented on them. I said, this is a mistake. They are going to push this, meaning the Chinese, out and into impact the midterm elections. And if the Trump administration is going to crash the market, they better do it now rather than waiting until the midterms. And they were well on their way up until April, when we bottomed out and we've had this massive rally. And we're going to talk about the crush that's going to happen given valuations, if in fact that this market does roll over, because confidence in the ability of the market to move up higher from here has crumbled. So let's check back in with the E-minis. We are now up about the same. We gave back a little bit of gains here. Let's look at the Nasdaq 100. And you can see here that after the market closed, here was the dump on the news. And I warn about this. Be very, very careful on Friday afternoons if you're thinking about putting on a big position in a heated news environment. It's very, very dangerous. So did we go adding to shorts on Friday? A little bit, yes, we did. We opened up a short position on Netflix. It's a probing position, not a big position. And I still like it nonetheless. So we have the NQ opening up. We have a short position here. opening up this evening 1.19% at current. Let's set up an alert. A couple of them. Do we fill the gap? And more importantly, do we take out the lows of Friday after the market closed? If we do, buckle up, folks. We're going to be in for a wild ride. And most critically, please, I beg of you, if nothing else, this market moves up higher, the one thing you must watch out for is volume. If you're a day trader, I can't help you. I'm not a day trader. I'm not good at it. I don't have the time for it. As a swing trader, I will be looking primarily at volume. What did we see last week in the equity markets as they moved the markets up higher? We saw volume go down below average. That's not good when you're breaking out to new all-time record highs. And that's exactly what we saw last week on the S&P 500 and on the QQQ. What else are we going to be looking for here on the market? We're going to be obviously looking at resistance levels. We have TrendSpider, which is going to help us out with that. And I'm going to be showing you how TrendSpider identified at the end of business on Friday that this market is in a world of hurt. And we're going to be talking about NVIDIA and the insiders selling there. That is just ridiculous. And what else you're going to be looking for is participation. With the triple Qs, midweek last week, we had about 55% of the stocks on the triple Qs trading above their 50-day moving average. That's a joke. At an all-time high, that's a joke. By the end of business on Friday, it was between 42 and 45 stocks in the triple Qs that were trading above their 50-day moving average. That is technically damning. It's very, very bad. So buckle up here, folks. I don't think a Truth Social or a visit to Meet the Press by JD Vance is going to help the situation out longer term, because we're looking at the macro picture. Midterm elections. China wants power taken away from the president at all costs. That's what they want. Ultimately, they want him gone. A puppet's in there, a Biden or whatever, and business as usual, take advantage of the United States, blah, blah, blah. So let's check in with, let's go to comments here. Mr. Sean, welcome. Lee Cable. What do you mean it's all gone? That shouldn't be all gone. If you sold it. You sold it, you stopped out. What happened there? You on margin? Those usually aren't very marginable, those ETFs. Why is silver stuck on TradingView? I have no idea. Go to TrendSpider. Definitely not stuck there. Jody, they tried in 2020 already. They don't take a hint. Bingo. Very wise lady. Something big is happening in the silver markets. Bullion by Post, the biggest dealer in the UK, has halted purchasing silver until the 13th of September. That a fact? Interesting. I got to digest that one. I heard Z had a stroke this past week. I hadn't heard that. Could be right. Shorted Palantir. I like that trade. Tesla. The value. Tesla, it looked as though, I didn't see how it closed on Friday, but it looked as though it was putting in a very shallow head and shoulders setup. I like the Palantir short. That had broken down the week before last, I believe, and then you had a rally back up and into resistance, and you had that fade on Friday. So I like that short. It's extremely expensive. Okay, let's move on here. Let's go through the Nasdaq. I have a hard stop at 7 o'clock. And if I slip up tonight, folks, I was sick as a dog last night, no sleep whatsoever. And I'm really exhausted. So I apologize if I make a faux pas, if you will, a faux pas. We have the Russell 2000 up 1.18%. Let's throw up an alert here. Do we make new higher highs? So I want to take a look. You've seen a lot of chatter about Bitcoin over the weekend. And for that matter, XRP. Let's check in there. I know the symbol. I don't know why I searched for it, BTC. Bitcoin continues to decline here. It was up all day today. I'm not sure what happened here. It was up like $3,000. XRP. Wow, XRP down. What the hell's going on here? I got to validate this. Looking at another chart. I'm showing Bitcoin up on the day 4.34%. I think this is wrong. Can somebody validate that? All right. I'm questioning the accuracy here of these numbers. XRP to the dollar. I'm showing up as well. So something's going on here. That's strange. Okay. 115690. Where are you getting that from, TF? Still have my spot XRP. My leverage position on my exchange got liquidated even with the stop in place. It was carrying 40. Oh, so your stock got triggered. You didn't have a stop limit order on it? I'm not a huge fan of stop limit orders anyway, but wow. All right. Sorry to hear about that. I really am. Yeah, I know he's going back over to the Middle East. That's from Weeble. Okay. All right. Thanks for that, TF. All right, what else do we have here? Let's check in with the US dollar. The dollar is up 0.13%. Let's check in with gold. Sorry about that noise. All right, the next time I hear that Bitcoin is the new gold, I'm gonna speak harshly to that person who says that, because it's clearly not the new gold. Gold is the old gold. Gold is the new gold. Gold. So gold up here a percentage point. Silver. Silver's looking good. There appears to be liquidity here. I think this is the COMEX. What else? What else are we looking for here? PA, palladium. That's up. We have a position here. We have a position in gold, silver, palladium. Keep in mind, folks, that gold is extremely extended. If we get a pullback here, I'm not going to be the least bit surprised. Are we back above 4,000? Yeah, we are. PL, platinum. Platinum up 1.5%. So the metals, they're the go-to. They are the go-to. I want to go and take a look at euro getting smoked here, down 0.14%. Japanese yen down 0.28%. These did not have good weeks last week. Overall, a quiet evening so far. Let's check in with energy. Crude prices got smoked last week. Natural gas got smoked. Light sweet crude up 1.12%, with natural gas up 0.35%. That's not a big move for natural gas at all. I would call that flat on natural gas. You'll hit the like. Yes, please hit the like button, please. I beg of you. Thank you, TF Hatter. If it's not for my couple of hundred producers that help me remember to say hit the like button, all that good stuff, leave a comment, all that YouTube stuff, I don't know where I would be, but I thank you very much. Appreciate that. Like, subscribe, you know the deal. Okay. What else do we have going on here? Let's talk about what else you want to talk about. We did natural gas. Let's leave it off with what bear market I am most desperately seeking to happen. What might that market be? Cattle. I need a good, reasonably priced New York strip. It's ridiculous. Are we at all-time highs? Again. Weekly view. Yep. All-time highs. Probably pardon the pun intended, because I didn't say it yet, probably the best bull run in history, or one that's going on right now relative to the rest of the market, with the exception of maybe gold. But live cattle has probably been in a longer-term uptrend than gold has. All right, okay. You made another channel during the week. Share your channel. Give it a shout out. All right. I think that's it. I think we covered it. Let's just check out the 10-year yield. 10-year is up 0.69%. Let's see what that looks like. I'm going to go to switch to 15 minutes. Oh, this is going up. It's only a 15-minute chart. So I'm not saying for days and weeks. I'm just saying overnight. It looks like it wants to go up. Volatility. So a huge spike on VIX. Great time for my, there we go, finally. All right, so we pulled back on VIX. The question is, do we break it? Or do we move up higher? That's the question. Okay. So that's the opening futures action. I mean, let's go back to the NQ. I set up some alerts here. You know, there's not a lot of volatility in the market right now. You would have think that, well, no, we didn't quite close there. No. Let's set up an alert here. I want to know if we put in higher highs. I think there's a lot of Wile E. Coyote stuff going on right now. You know, Wile E. Coyote jumps off the cliff or runs off the cliff. The question is, when does he realize Zendu? I'll check it out. Trump Media and Technology has accumulated approximately $2 billion in Bitcoin with related assets, which is up to 2/3 of its total liquid. Yeah, I got to admit to you, I don't like that. I don't like it. I think that he's got to get so wealthy during his presidency to protect his family from the hell that's coming after him and them after he's out of office. So I understand, but I don't like it. I don't like it. All right. Let's get to. We know about what caused the sell-off here. I'm not going to spend too much time, but what I will do a reminder of, I'm going to do it, I told you so, is that this was the title of last Sunday's live stream. The Mag 7 just flashed a warning sign. And you've seen names like Palantir, NVIDIA by the end of business on Friday. All of these stocks are showing a lot of strain at current. And you get the vibe in the market when you begin to see really oddball headlines, such as, let's say, is this it? Yeah, here. I sent this out on the 7th when I saw this article. You remember a few weeks ago, Oracle just went skyrocketing. I hadn't heard about Oracle in years. You know, I know of the stock, but I heard nothing about it. Nothing that's innovative. Anyway, they're a great company. Larry Ellison loves his young hottie chicks. Hey, God bless him. I do not begrudge him. God bless him. But then, only a couple of short weeks after Oracle goes screaming up on a sweet deal, it reveals that Oracle lost $100 million from renting NVIDIA's chips in the most recent quarter. What? And then you take a look at the vendor financing that NVIDIA is offering and Oracle are offering to AI, C3 AI, ChatGPT. And this is all, and I don't expect that everybody remembers back during the 2000s when they had the vendor financing. I mean, I start seeing stuff like this. It takes me back to 2020, 1999, we were hearing about this. And the company that we first heard about it was a Canadian company. It was called Nortel. I believe it was 1999. And it took about a year before it really began to become a strain on the market because all too many companies were doing it. They were giving their servers to companies that had no revenues. And there was just a glut of now supply as these companies went out of business. And I remember going on eBay and you could buy Sun Microsystems servers for cheap on eBay. The party was over. Clearly it was over. So you start seeing stuff like this, and this is after I put this out. This is just more validation. And when you take a look at, here's a tweet from Maverick of Wall Street. Demand to NVIDIA AI chips may be dropping, but demand for $10,000 Tom Ford leather jackets is hotter than ever as CEO Jensen Huang keeps dumping shares like there's no tomorrow. He's not the only one. TrendSpider. If you take a look at NVIDIA, look at all these sellers. This is just the directors. Look at all this selling. Jensen Huang, I mean, this is going back. He's been dumping since, I wouldn't call this dumping. He could have program sells, and a lot of these executives have that. But the rate of his selling has really just ramped up in recent months to the point where you can't just write it off as being, you know what? You know, he's probably told his brokers to, you know, sell X amount per month so we can have capital live by and doesn't spook the market. If I were a holder of NVIDIA stock, I'd be a little bit spooked looking at this acceleration of selling. And when you take a look at the stock last week of NVIDIA, this should be troubling to everyone because when you overlay the automated trend lines Click of a button. Here, we had a breakout again. This is the second time that we have broken out above this upper band of automated resistance in green above the we broke out on the week of September the 29th, last week, bearish reversal. It failed to hold it. We saw the same thing back here. They broke it out, rejected, broke it out, rejected. This is not when you buy NVIDIA stock. You don't buy NVIDIA stock when you're trading up and into a resistance level. And this is why I always warn, when you get a breakout, wait for the retest. Wait to see whether or not that following week it pulls back, holds the support level in green, and then begins to move up. That's your buy signal. That's a breakout above resistance, retest, follow through. That is a tried and true strategy for making money in a momentum stock. By buying because we broke out the week prior to last and hoping that the retest holds, that's stinking thinking. That's bad trading. That's horrible trading because you're buying on hope. You're not buying on fact. And that's exactly what you saw with NVIDIA. Now you have to hope this week, if you bought last week, that when we rally, and I think that we'll probably rally this week, do we have the rocket fuel to rally through this upper band of resistance again for the third time in the past couple of months in green? Can we get through it? Watch your volume. If you don't get daily volume, we may close above it. The question is, does it hold it? That's what matters. Also, you're seeing similar price action on the Qs. We broke out the week of the 15th, retest. You could argue whether or not this held or not. Then the following week, we had follow through. That was a bull trap. That was a bull trap. And that's okay. If you get sucked in by a bull trap, okay, it wouldn't be the first time for me. It happens all the time. But when you usually get a bull trap, it's at the highs of a market top or at the highs of a trading range. And it implies you're going to get a reversal, not necessarily a bear market, but a pullback to orderly support levels. And what happened last week? We had a bearish reversal bar, an outside reversal bar. We failed to hold support. And this is not a pretty chart. It's ugly. We broke support last week, and we did it on volume, institutional distribution. So beware, folks. Be very, very careful with this market. Now, just getting back to TrendSpider really quick. If you don't have it, I give it away free to our silver and gold level members. If you're not ready to take that route yet, they have a sale on their advanced, enhanced, and premium. You'll get a better discount than what I could give to you, between 45 and 42%. For their standard package, I can get you a better discount. Use my discount code CON35. Use the link below to get these discounts. If you're watching on YouTube, link above on Facebook and Twitter. Let's move on. We don't need to talk about this. News events coming out this week. Obviously, the markets are closed tomorrow. Again, stock market open, bond market closed. And that's really not good that the bond market's closed, because the bond market is the tail that wags the stock market dog. So I'd be careful of putting on any type of one position or the other, long or short, in a big size, because you want to make sure that you wake up on Tuesday, you don't have bond yields plummeting because there's fear of a new round of tariffs on China. Or headline, just simple headline news, a tweet, a Truth Social. Tuesday, NFIB Small Business Optimism Index. All we keep getting lately is just Fed governors coming out. Wednesday, Empire State Manufacturing Survey. More Fed heads, Fed Beige Book. That's their read on the economy. Thursday, retail sales, very important number. We get inflation data out this week, folks. The PPI, that's measure of inflation at the producer level. initial jobless claims. We get that every Thursday. Philly Fed comes out. Housing starts on Friday. No CPI? Oh, no, there's no CPI this week. It must be coming out the following week. Yeah, it'll come out on Friday, the 24th, CPI. So we're going to have two back-to-back weeks of inflation data. And I don't think it's going to matter one way or the other, a little bit hot, a little bit cold. They're cutting rates. Schiller PE ratio. We managed to close down below 40 on the Schiller, but folks, we are still strongly overvalued as measured by the Buffett indicator. I mean, think about your risk reward here. You know, you're looking at this market, you're looking at these Truth Socials and JD Vance coming out and saying, oh God, maybe it's safe to go back in the water. I'm going to buy the dip from Friday and I'm going to make a mint here. You're not buying cheap. You're buying extremely expensive, and you're buying a market that is technically on shaky grounds in the second most volatile month of the year. Be very, very careful of what you're doing here. I wouldn't be the least bit surprised to see any rally here get faded and we break down to new lower lows. As a matter of fact, I'm short, so I'm betting on it, literally. Earnings coming out this week. So this is going to be the beginning of big bank week and the beginning in earnest of the earnings season. BlackRock, JP Morgan's, Goldman, Citi, Wells, all coming out on Tuesday. Wednesday, we get, Carew comes out. We booked profits on Carew. Thank God we did, because the stock dropped like a rock. We had a trailing stop on Carew. We made a few bucks, got taken out of it. Wednesday, before the bell, ASML. Keep an eye on Dollar Tree. I want to go over that chart. More banks on Wednesday. Bank of America, Morgan Stanley, Synchrony Financial, Citizens. Transport play coming out. Taiwan Semi before the bell on Thursday. KeyBank, Bank New York Mellon before the bell Thursday. Charles Schwab. Interactive Brokers. More transport, CSX. We've traded out in the past. Amex, State Street, Fifth Third, Regions. Now, so you get on Friday, you're going to see more of the regional banks come out. So it's going to be a very, very busy earnings week. So the only thing I would keep an eye on this week in terms of economic data is the PPI. Other than that, I think that it's going to be all about earnings. Watch for the vibe. Watch for the charge-offs on and delinquencies at these big banks, and in particular, the regional banks, which won't be reporting this week, but they will be reporting the following week. The regional banks have very, very high exposure to commercial real estate. Be very, very careful. We put on a trade short of the real estate in general, but had commercial real estate in it. It broke out last week, rallied along with the volatility index. So something's going on in real estate. You saw the banks, both the money center and the regionals, break hard last week, and they did it before Friday. Something's up there, and we can only guess about what's going on there, but we do have some data. U.S. freight and recession. I've talked about this in the past. We went over the packaging ETF or packaging index, and it showed that we were breaking down. If you take a look at that chart now, it's an utter train wreck. Let me see if I can find it quickly here. Here, found it quickly. Done like a pure professional that I am at doing these live streams. Pure professional. Dow Jones U.S. Containers and Packaging Index, we're down 4.23% on the month alone. We're not even at the midpoint yet of the month. What are we down on the year? Down over 15% on the year so far. So much for export growth. What else do we have here? Earnings we did. So back to this. U.S. heavy truck sales have declined by 55,000 over the past 2 months to 400,000 annualized, the lowest since the 2020 crisis. Truck sales have fallen by 151,000 in 2 years. Historical drops like this only occur during recessions. And the gray area here are, in fact, recessions. But to be fair, truck sales fall far in advance of a recession. So we may not see a recession for a year, 2 years, given some of the data here. So we want to put things into context. We don't want to be hyperbolic. We want fact, fact, fact. We'll leave CNBC to provide the hyperbole that keeps the market going up. Auto loan delinquency. This is why I want you to watch these big banks. You're seeing a lot of nefarious behavior out there by Tricolor Financial, a couple other auto loan, subprime auto loan companies that are going out of business. Auto delinquency rates at its highest level in 14 years. The percentage of subprime auto loans that are 60 days or more overdue on their payments has hit an all-time high of 6.4%. So while prime is moving up higher, subprime looks as though it's about to go parabolic. And for those that are curious about the name of Tricolor, and fact check me on this, I have not done the fact check. I have heard, and it kind of makes sense given their core demographic was the illegal alien. That the tricolor is for the colors on the Mexican flag. Again, fact check me on that. But their business model was lend to those who weren't supposed to be here legally. Not the best business model. Sounds like one that was built on quicksand. But I'm sure they sliced and diced the bonds, sold them off to the unsuspecting buyer, and they'll be fine. No penalties will be forthcoming to them. And that's it. Let's do some chart requests. Let's go back to our friends over at TrendSpider. Now, I'm going to make a quick announcement here. I suspect that by early November, the new website, I'm talking about completely new website, front end and back end, meaning the members area, will be mostly completed. There'll still be bugs that'll be worked out, but mostly completed. What will be going away is this forum. What did I do? Close it out? I got to get back up here. This is going to be going away. Now, we do have a lot of people that have joined. They request their symbols. They engage in conversation. What I'm going to be doing, it's not going to be on our pricing page, but I don't like to leave people left hanging out in the lurch. They join in. They're good community members. I will be offering them free access to a free level membership. It's not going to have access to the trade alerts, but it'll give them access to some free content and to be able to enter a symbol for Sunday Night Futures Live. But there's going to be a lot of change coming to the Contrarian Trader. So even still, if you haven't signed up for this, still sign up for it. We'll send you out the link. I have the email addresses. I'll make the announcement. And you will still be able to request your symbol and be part of the community. We love the community aspect. We are going to be going back over to Slack. Now, how that's going to work out right now, I have to pay for Slack. So I don't think I'm going to be able to offer free memberships there because it costs me about $7.50 per month per user. Uh, this has not gained traction per se. So I've decided to change business models and go a different direction. Ultimately, what will be done is that I'll be one of the first that has incorporated AI into the members trading platform. Different level memberships will have different levels of AI access, whether it be trade journaling, uh, knowing what stocks you've requested, how are they doing, bots in the Slack forum letting you know the gravity of a sell-off. Like on Friday, if we had a broad-based sell-off in major sectors, banking, tech, etc., it would have fired off in Slack automatic. I wouldn't. It's just the AI doing it, letting everybody know. Listen, this is broad-based. This is a significant sell-off. Check your positions, tighten up stops. So a lot more coming in the coming weeks and months. We are in phase 1 and 2 simultaneously right now of the redevelopment. Phase 3 is in concept phase right now. Prices will be going up on new members. So if you want to join and you want to deal with the in progress build out, fine. Your prices don't go up. But for new members, once we get phase 3 fully implemented, prices are definitely going to have to go up because my costs are going to go through the roof. But it's going to be worth it. It's going to be very, 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 very worth it. So, and we'll be the first in the industry having achieved that. So I'm paying up. So please take advantage, sign up, and it's going to be an awesome, awesome 2026. Let's get to some stock chart requests. What do we have here? Thank you, Franklin. Oh, one of the other things here is that it was getting too much spam. Franklin's been great. He's one of our moderators. Talon's been great. Sean, with identifying spam, we don't have to deal with that. So I don't want to deal with it. I have no time for it. They don't have time for it. So that's why we're making the change. And yes, they will still be moderators on the Slack forum. They're very, very valued. Paul, NEE, Franklin, UTIL. We sold UTIL last week. We had some really good profits on that one. We opened that position up, I think, on the 30th. I think we were, I don't know, between 18 and 20% profit, something like that on it. But we'll go over it. I still think they're going up. They have pricing power. I just wanted to make profits real. I was getting the vibe that things were not right with the market last week. And as it turns out, that vibe was accurate. So let's get to it. NEE, Nextera Energy, weekly chart. And this is the power of the automated trend lines, folks. I like this chart. Don't get me wrong. I like it, but I would not buy it. Why? Let's talk about the whys first. A, I don't buy stocks when they're trading above their third standard deviation Bollinger Band in red. B, I don't buy into resistance. Now, you could argue that we closed above this fractionally. I don't know. It doesn't look as if it did. And even if it did, I want to wait for the retest. So either way, we would wait for the retest, maybe week 1, week 2, consolidation. Maybe that week 2, we get follow through. So I would be a buyer on the follow through. The only other caveat is that I would stay small because if I bought the retest, I'd be buying it around, let's call it 83.75 on a follow through. I have resistance right up here at 84.60. So I'm going to want to keep that probing buy very, very small because I don't know if we're going to break through this resistance level. So I like it. Were I long, I would stay long. I would probably sell calls if it's optionable. Let's go to a daily chart. Daily chart, I think you're going to come in here. I think you have your rounding top. Watch for support, $80.97. I would look to nibble at that price point. And I'll be honest with you, the down volume on Friday was not very large relative to the market reaction to the news out of Washington. So the shares appear to be in firm hands. So that does not mean it can't pull back. It will pull back. I'm very confident in that. I would look to buy the pullback. And then, as we always do, you want to pyramid up, right? You want to put in your initial trade, buy that breakout above the weekly resistance level here. Then you want to add more on above this resistance level here. So you have purple, green. You want to add on a break and a close above those resistance levels with tight stops. It's logical stop loss orders right below. So wait for the pullback. Long story short. That's NEE. We have Mr. Sean, a gentleman, a pioneer in the trading realm. XOM. I want to change the three standard to a 2 standard because I'm getting a vibe. And the vibe is absolutely accurate. What you're seeing set up here is a Bollinger Band squeeze. The Bollinger Bands are in red. In yellow are the Keltner channels. We have the Bollinger Band squeeze setting up here inside of the Keltner channels on a weekly time frame. Let's go to a monthly chart really quick, see if it's the same thing. Yeah, monthly time frame as well. So this is going to have an explosive move, one way or the other. The question is, which way is it? That's the big question. We know it's going to have an explosive move. Is it to the upside or is it to the downside? So normally what happens in situations like this is that you get, just before the big move, you get a big push down because institutions don't want to pay retail. They want to buy wholesale. And when they buy, they need liquidity because they're not buying 100 shares like mom and pop. They're buying 100,000 shares. So they need scared money going into the market, selling their positions because they got to get out. All the while, all they're being is manipulated, and the big money's coming in, and they're buying their shares, and they're not moving the stock. Well, they're buying 100,000 shares because you have so many people selling. So what generally happens is that you have a head fake in one direction or the other. You could argue that we had it back here, and we've recovered. Maybe so. We don't know yet. So what do we do? How do we manage this trade? We do it like this. It's not going to be reflected on, looks like I already did it. It's not going to be reflected with the automated trend lines. You can't always rely on your automated trend lines. You got to have to use your manual trend lines at times. And we've identified in the past that we had an upper band of resistance and that it would be sound to buy the breakout. But what happened? It failed. You should have been stopped out here when we failed. Small loss, not a big deal. You should have only had a small opening position. Not a big deal. Live to play another day. Just because you got stopped out doesn't make you a bad person. It just makes you smart. Small losses. Because if you did stop out the week of the 29th, you didn't get hammered like a baby seal the week of October the 6th. So what's the plan here? Now that we know we have a weekly Bollinger Band squeeze and a monthly Bollinger Band squeeze setting up, well, we're not going to short the stock. We're also not going to buy the stock yet. When do we buy the stock? Well, if we get a flush down to support levels like right here, 109 to 108 just looks like a right number to me. And if we don't get that, let's do a hypothetical. We get a gap up, rising oil prices. We know ExxonMobil trades with rising prices. What if we gap up and we manage to recapture and close above this resistance level here at around 112? That seems reasonable. to begin accumulating a position. Then, as we begin to take out resistance levels and we grow more confident because now the price is validating that our initial buy was right, and we close above resistance at 118. How do we know that's resistance? The chart's telling us that. The high of the week of the 22nd was 118.18. It was also resistance back in here. So we add more to the trade. What do we do with our stop? We raise our stop up right below that weekly low. We break it, we get out. Small loss. We still collect the profits from back here, and we keep the loss from this new buy really, really small. That's how I would trade this. I think ultimately we're going to break out, and we're going to break out higher. That's where I think it's going to go. Right now, we're in a trading range. There's no reason to do anything at this point, but simply watch. Set your alerts, just like this. I want to know, very simply, touch, bounce, a little bit of sensitivity, not much, a little bit. We're going to keep this active for a while. XOM, weekly, Bollinger Band, squeeze. We know what that means. Support, hit, buy. And given the length of this consolidation, we got to keep this active for as long as possible because it can go easily another 60 days without doing anything. Now, another alert we want to set up is a breakout. But this one here, we don't want any sensitivity. I just care about a close above that resistance level. Same deal here. Keep it active, 60 days. We're good to go. And here's the behavior. Here's the discipline. You set your alerts, and then you forget them. If you stare at the stock over and over again, you're going to push your trade, and you're probably going to be wrong. So let the alerts do the work for you. I have alerts. So if you're DEO, that's a stock I'm looking to buy. Diageo, Palantir fired off. We were already in that trade and out. We made some money there. What else do we have tonight? Rob Lowe, ARGX. Good run. Again, I can't buy a stock that's even trading up and into its 2 standard deviation, Bollinger Band. I would use a stop if you're long right now. I would probably be, it's got lots of momentum behind it. I'd be using a trailing stop loss order on this one. Let the market take you out. If you're going to use a static stock, looking at 750 as a support level. If that fails, it's probably going to break lower. I would use a trailing stop percentage basis. You decide. Check the rate of change on a daily basis or weekly basis, and that'll define how you want to set your trailing stop. So that way, you're not setting that trailing stop too loose. So if you're long, I would stay long. If you're going to buy, I would buy on a new weekly higher high and set that trailing stop loss order right away. You know, the daily chart's not telling me we're going down, but it's also not telling me that we're breaking out. This is not a clean bull flag setup. I would buy on a rally up and through 812.50, and I would use a stop right below Friday's lows. I would keep that loss so small and get out. You can always buy back. You just got to keep that loss small. MDGL. And stay small at the positions, folks, especially in this market environment. The daily chart on this stock looks good, but we're not going to start with that. We're going to do what we always do, and that's with a weekly chart. And this is the power of the automated trend lines. I've never looked at this chart in my life. That's the algorithm. Now, we've been stuck here at this resistance level for over a month now, well over a month. It's got almost a megaphone formation to it. The easy play here is that, if you wanted to buy this, if your intention is to buy 100 shares, buy 20, use a stop right below the lows of this range at around 412 per share. That way you get stopped out, no harm, no foul. Where I would get very, very aggressive with my buying here is not on a close above 436.42, but on a close above 448 per share. That'll take me above not one resistance level, but two. And if we consolidate there and then get follow through, I would buy more. I would finish my buying, because then I think that we rally up into the fives pretty easily. It'll probably be pretty quick. Now, the reason why I'm somewhat bullish on this, even though we have immediate resistance above and we're kind of stuck, is that I kind of like the daily chart. And you can see how that dash line that I drew on a weekly chart here has acted as resistance on the daily chart. So what you're looking for on the daily chart is a breakout out of this. This is not really clean. I'm very anal with my charts, so bear with me 1 second. Got it. We got to make it right. Either we do this right or we don't do it at all. Remove that line, son of a bitch. All right, there we go. Now we're going to do this right. There we go. So to me, this is a bull flag setup. It's an orderly pullback, very light volume to the downside. Friday on a down tape, the stock closed up on up volume. Now, to be fair, we were higher on the day, but to be fair as well, we were down on the day. We had a doji star formation, a sign of indecision. I think the stock goes up, therefore bullish. Franklin, UTIL. What the heck is this? Oh, UTIL. Why is it defaulting to this? UTIL. I'm just going to go with here we go. It's UTSL. It's UTSL. You meant the utilities, right, Franklin? Okay. So again, folks, the power of the automated trend lines. We booked profits here. I think we bought back here. We booked our profits. Why? A, I was concerned about a shaky market. B, we had a heck of a rally. C, look at the resistance level up here. It pays to sell into resistance. If we get a retracement, and this is a leveraged product, we can easily get a retracement back down to the support level at around 45 bucks a share. If it pulls back to 45 bucks a share and holds it, I'm a buyer again of UTSL. Why? Because utilities have pricing power and they are building massive data centers. And guess who's going to foot that bill? Not the data centers. We are. That's why your electricity rates are going up so high. And that's it, folks. Let's go to comments. TF Hatter, you're very welcome. All right, guys, if you're leaving symbols in this thread, you got to put them in the forum. I can't track them, and we're over time anyway. And I have a hard stop at 7. I'm already over, folks. Thanks for being here. Have a very, very profitable day. I want you to take notice that none of the alerts that I set so far have fired off. Why? There's not a lot of conviction to the upside nor to the downside. When that gets resolved, we're going to get a big move one way or the other. So be careful in this market. Have a profitable trading week. I'll talk to you soon. Be well. To my Italian friends out there and pure Americans, happy Columbus Day. Be well.